Welcome back. You're tuned into Market Cafe, and the biggest news for the day that perhaps is a very big shot in the arm, at least for the Indian markets, is the fact that we have finally reached a conclusive deal with the US. We saw that announcement coming in on Trump's social line by PM Modi. But to get a sense of what this deal really means and the impact that it will have, we're now joined by Rajeev Agrawal of Doordarshi India Fund joining us. Hi, good morning, Rajiv. Thank you so much for joining us today. Rajiv, this Tuesday morning seems to be, at least on the face of it, seems to be a very good. It's like a shot in the arm for the Indian markets. Especially after the anticlimactic reaction we had to the budget. This trade deal coming through seems to be auguring very well.
Absolutely. This is something that we have been talking about for a little while. It has taken some time to come, but I think the tariff rate of 18%, I think, is a pretty good tariff rate compared to some of the other countries, which are more around 20%. So I think it positions India in an advantageous position from a tariff perspective. And I think, of course, more details have to come out. But the original rate or the first rate that we are seeing seems like a good positioning to be in terms of exporting goods to the US.
Indeed. Hi, Rajiv. Morning. This is Shrishti also joining in. What a news to start the day with, or rather end the night with, because it really came quite late at night, and what a pleasant surprise. But from an investor point of view, Rajiv, everybody wants to know that which sector will be the key beneficiary, because we have seen from textiles to maybe some concerns in pharma to autos and lots more. But what will you be watching out for? As per you, which sectors will be the key beneficiary of this deal that has been announced?
Absolutely. So I think, India, clearly the advantage is the labor and the cost of labor, right? And if we look from that perspective, I think textiles would be one of the industry that should benefit over time, because clearly India has a competitive advantage there. Earlier, there was a disadvantage because of the tariff that will go away. Gems and jewelry is another sector which should do very well, given that India exports a lot to the US in gems and jewelry, and that particular sector actually got impacted last year, in the second half last year, because of the tariffs. So I think that should come back quite strongly. I think pharma, electronics have not really been impacted too much because of the tariff. So I don't think that will have a major impact because of this, but at least it will give some more certainty in terms of what to look forward to in 2026. So I think more of the labor intensive industries, I think even auto components, where India is exporting a decently competitive sector for India, I think would be another one area that I would think can do quite well from here.
Rajiv, as of now, what we know and understand is that the tariffs have come down to 18%. While that offers a lot of competitive, intensity for India, vis-a-vis the other emerging markets. But what's really important to understand is what is India's trade-off, because the fine print though hasn't come out. But a couple of things that the U.S. president mentioned, like India will stop buying Russian oil immediately. They'll be buying more from the U.S. Also, the $500 billion transaction of U.S. energy, technology, and agriculture. What could be India's trade-off here?
No, India clearly needs a lot of energy imports. US now has started exporting energy. India needs energy. I think LNG on the gas side, India can import a lot of it. On the oil side, also India can import a lot of the energy. So I think that's one area which I feel is a clear, simple, easy win for both the countries. Beyond that, the other areas that could also be part of this is really around the defense equipment. India is looking to bulk up on the defense abilities, and clearly partnering with the US, it could be a very strong partnership for the coming decades, multiple decades. So I think defense is another area that could be very powerful. And then the third thing, which India is really trying to do a lot of, is in semiconductors and the latest technology. And really, in that area, if India and US can work together with India's talent and US ability in terms of all the innovation that it has done, there could be a real win-win even in that particular sector as well.
Well, absolutely. But Rajiv, in the hindsight, one can also say that this deal can not only boost the trade that we will have with the US, but along with that may also give support to the rupee and may once again invite back the FIIs into the Indian markets. What are your thoughts on that? Is that something that the FIIs have been waiting for, or do you believe that the valuations could still be a concern for the Indian markets?
Absolutely. I think rupee has been hammered in the last, let's call it a year, since all these negotiations started. And we have seen in 2025, rupee depreciated around 5% vis-a-vis dollar, when most emerging market currencies actually went up vis-a-vis dollar. So really, rupee has been struggling. And the sentiment was quite negative because not enough tangible progress on the India-US trade deal. Now, with that, we have already seen the rupee come back quite strongly today. And I think it will give the support that the Indian rupee would want to have, because clearly it was just a one-way flow so far. And I think that as soon as the rupee starts stabilizing, we will start seeing FPIs and FIIs also start coming into the Indian equities, because clearly India is a growth story. I think you have to look at valuations and figure out where the valuations are compelling. But the one big drag of around 5% last year and already a few percentage this year would actually hopefully not be as big in 2026. And that would be a big win.
All right, on the face of it, at least it looks great, and here's hoping for a very positive start for the Indian markets. On that note, thank you so much for joining us. We'll let you go on that note.